All right, guys. We've got a lot of ground to cover here on some very interesting material, but I do want to give a little bit of time for intros. So if we could actually start, Michael, at the end there, and everyone just do a quick 20-second intro.
Sounds good. So I'm Michael Shaulov. I'm the CEO and co-founder of Fireblocks. We provide market infrastructure for financial firms.
Hello, everyone. My name is Tushar Jain. I'm co-founder and managing partner at Multicoin Capital. We're an investment firm focused on the crypto space.
Hey, everyone. My name is Ben Forman. I am the founder and managing partner of Parafi Capital. We're a DeFi-focused asset management firm.
Hello. I'm John Steinberg, founder and CEO of WisdomTree. We manage about $75 billion, mostly in ETFs, but transitioning very aggressively into digital assets.
Awesome. Thanks so much, guys. So I think with something like DeFi, you almost can't start too high level. So most of us are probably familiar at this point with the narrative of Bitcoin is digital gold. We all understand how to talk about that. When you think about DeFi, what is the framework that investors should be looking at this from? What's the kind of one-sentence summary or why the space is so interesting?
I'll start. Financial services have been built on the old rails where banking, brokerage, credit, it's all separate and it doesn't move smoothly. On DeFi, on distributed ledger, where the savings, investing, payments are all on one tech stack, the innovation and efficiencies will transform financial services going forward, but it will require responsible regulation to pull it off, for big money to come into the space.
Yeah, I mean, I think about DeFi as almost an internet of finance. It has several distinct differences from kind of traditional financial markets. One is that it's permissionless to access, so anyone can build an application on DeFi or use DeFi without getting anyone's permission. It's peer-to-peer, so all of these applications are non-custodial. There are no broker-dealers. There are no banks. There's no direct counterparties. The applications are censorship-resistant. So no one can, they're all built effectively on neutral databases, which are blockchains. And they're completely transparent. So you can look into these different financial products. You can see every single transaction out in the open. And the last thing is they're global. So most financial products built, in today's analog world are, built within physical borders. They're regulated within physical borders. So DeFi is really kind of the first set of global financial products that have existed.
I think that's really well said. I agree with all of that. One other way that I look at it is I remember when I was starting my professional career and I looked at contracts for the first time and I was like, why is this in a different language? Right? Like, this isn't English. It's legalese. It's almost a different language. And actually, legalese is a programming language. It's just a programming language that is executed using human brains and like the judicial system. And that's what I think DeFi really is taking those contracts in that legalese programming language and putting it into a more efficient programming language that can be executed on silicon instead of on human brains. And then it comes with all of these other benefits that Ben mentioned and said really well, so I won't repeat.
Yeah, that's actually a pretty good explanation of it. But I guess, just to maybe to add a bit on that, because I think everything was said pretty much explains what DeFi is. The idea around blockchain, right, is the ability to disintermediate risk, right, or basically remove counterparty risk. And it starts from Bitcoin, but clearly, as we're thinking about financial applications overall or financial services, right, in the traditional space, it's all always relying on some kind of a centralized party that mediates either the transaction or the agreement, right? It basically enforces the agreement. So the idea about DeFi is to use the power of the blockchain and to use the power of distributed computing to basically execute those applications, right? And execute the contract in such a way that there is no counterparty risk and essentially the same sort of majority voting that we have, or the consensus algorithm that governs what we're familiar with Bitcoin is basically governs the execution of those contracts or the ability to execute those more complex financial transactions or applications.
Michael, you had the hardest job there. You were at the end of the line. So you had to go after everyone else's explanation. That was great. So I think there are two different frameworks maybe to look at DeFi that I want to get your opinions on. So there's one from this being disruptive to financial services, and then there's one from maybe an investing standpoint, and how should I categorize the different sorts of DeFi protocols that exist. So let's talk about it from disrupting financial services kind of perspective. If you look at the rise of fintech, let's say over the last 10 years, it's being very disruptive in finance, but ultimately it might be a little limited because they're great front ends and they're winning customers and stuff like that, but they still all have to settle back to the legacy rails that are owned by the banking system. So talk me through, like, in a little bit more technical detail, what is the implications of building rails that are outside of that system? How big is the potential for this market or this area?
Again, I'll start if you don't mind. So I take it to ETFs, where I saw in '99 the wrapper had $40 billion worldwide, but liquid, transparent, tax efficient, the structure today approaches $9 trillion. So if we are able to create the innovations, the efficiencies possible on distributed ledger, you will, I believe, pick up the users, because it will be the better investing experience or the better user experience. And it's the globalization, it's the peer-to-peer, it'll be things like T0 settlement. So it's a little bit better here, a little bit better here, a little bit better here, and at the end of the day, it's a whole new world. What we need to do, though, is it's more than just crypto. You said, Bitcoin is digital gold. I take, umbrage with that. We're the third largest gold manager in the world. We're bringing gold to the blockchain, and we want to turn gold into currency so that it can be used in transaction, savings, and investing. So, but I think it's truly the beginning of the new rail. The central bank digital dollar, when it comes, will give so much weight and power to the blockchain that it will be inevitable. But thank God, legacy issues hold back all of the historical players.
Yeah, that's great. Yeah, I mean, what I would say is, like, I think a lot of people take the approach of thinking about DeFi as this almost like separate ecosystem that's happening over here, whereas the rest of finance is happening over here. What I think we're starting to see is just this convergence between DeFi and finance. I don't think the term DeFi will really be used in 10 years. Everything will just be finance. People don't call finance centralized finance today. So what we're seeing is this convergence of the worlds, where you have neobanks, fintech companies, traditional banks, basically building on top of blockchains and accessing different financial products, these DeFi applications, for really like all the things you can do in finance, the finance verbs: lending, borrowing, hedging, indexing, insuring, saving. And they're really presented as microservices, similar to AWS. So you'll go to Compound to do your lending and borrowing. You'll go to Uniswap to do your trading. You'll go to Nexus Mutual to do your insurance. And all the complexity of all that is abstracted away from the end user. So right now there are roughly 3 million unique addresses that have ever interacted with a DeFi application, mostly kind of hobbyists or early technical users. For DeFi to go from 3 million to 1 billion plus users, most people just don't care about the complexity, right? They just want financial products that actually are, work very well. And so that layer on top of these financial institutions will abstract away that complexity, and I think that's ultimately how DeFi is going to scale.
Yeah, I would agree with that. I mean, if you think back to the early days of the internet, people used to put the letter E in front of everything, like e-commerce, right? But that's just commerce now. And like, I think we're going to see the same thing with DeFi. It's just going to become finance.
So how do we call finance? Like, it's like a VHS?
It's the Betamax of the future. But I think the way that one of the ways that it could evolve is DeFi is kind of this global back-end financial system that then regulated, localized companies sit on top of. And those localized companies are the ones who are going to do all of the regulatory compliance work. They're the ones who are going to provide the customer support. They're the ones who are going to do the marketing. And You know, regular people are not necessarily going to be interacting with the base layer DeFi. You could, it is permissionless, you will be able to, but you might not want to. You might want some of the protections that having a company within a jurisdiction enables you to have. And I think that, you know, that's probably how that gets abstracted away. Just like, you know, right now you can go on Robinhood and like buy crypto, and then Robinhood settles to, you know, the Dogecoin blockchain for you. Well, then that's the same thing that's going to happen. Is like, well, I still have an account with Robinhood, and then they settle to the blockchain. And I think that's going to become the more popular mode.
So I think, you know, first of all, I agree with it, and I think it's already happening today, at least, you know, for Fireblocks, where we currently sit in this whole ecosystem. You know, and especially we do work with some people on this panel, and we also work with some of the neobanks, and it's so much of this fintech in the front, DeFi in the back already, right? So we've launched, actually it's Compound launched something that's called Compound Treasury, which basically allows access to, you basically wire dollars and you get 4% interest, right? But at the back end, you know, it's basically being on-ramped through a legal entity or MTL entity that we have into USDC, deposited into Compound, and essentially managed it in such a way where they can basically pay 4% on the dollar, right? But they completely abstract, right, the entire complexity of how this is being done. And honestly, we had such a success with this product. You know, it's like 2 months, you know, since we introduced it into beta, and we have a handful of neobanks, right, that they just sit on dollar reserves, and they don't want to see those dollar reserves earning, I don't know, what is it, like 25 bips, right, or whatever. But they're getting 4%, and the fact that you can basically enter or exit the position, and you know, here we also assume the fact that there is a fiat rail involved within hours, right? It's something unheard of, right, in traditional finance, right? So I think that, you know, you know, first of all, a lot of the activity that needs to happen right now, and you know, I think we mentioned tokenized gold, but basically, first and foremost, we need to bring the instruments, right, into the market. So we already have stable coins, right, and we have some projects around, you know, tokenized gold or basically other commodities. I do think that, you know, tokenized securities is sort of also important for this space. But basically, once we have the inventory, and NFTs, once we have the inventory tokenized, we already have the application layer, right? We already have the trading, the lending applications. And then it's almost applicable to any financial service that we currently have out there, right? You can think about, it's very easy to envision how you basically disintermediate, you know, remittance between, you know, countries, right? Because you have stable coin in dollars, you have stable coin in Japanese yen, and you know, using Uniswap, you can basically do an FX conversion and wire it to the other side of the globe, right? So, you know, you disintermediate facilities like CLS even and things like that, and you know, clearly securities and all those other things. So I don't know how much time this process will take, but probably within the next, I don't know, 5 to 10 years, at least, like, you know, all the clearing backend and all the infrastructure the infrastructure that was built in the 70s, in fact, is going to be re-platformed using DeFi. That's my view.
Yeah. And I want to ask one more question just on the financial infrastructure side before we transition to the investor's perspective. I would love to give, so I get this idea that this is open source software. It's essentially an upgrade to the financial infrastructure that TradFi, or VHS, as Michael would say, is built on. But I want to give a specific example of what that looks like. And one thing that I think is pretty interesting in crypto is the speed of kind of the way collateral moves through the system. So if you go back to 2008, 2009, when the great financial crisis was happening, one of the large problems there as prices were dropping, right, collateral couldn't move through the system quickly enough. And there was a big question about where are my assets, who even owns these assets. And one thing that crypto gets dinged on a lot, but I think is actually a huge positive, is these automated liquidations and kind of cascading liquidations that happened. And yes, that can lead to huge price swings, but ultimately, everyone always knows where the assets are, who owns them, Do you see that as being an improvement? Is that a permanent feature of the market? What do you guys think of that example in general?
I mean, I'm a huge believer in transparency. I think it cures a lot of evils in financial services. A lot of bad things happen in the shade. And so I think that for the consumer, it will prove to be a huge benefit. But the distinction is crypto travels naturally over the blockchain without any speed bumps whatsoever. We need to bring that inventory that Michael was talking about onto the blockchain, treasuries, gold, any other asset that can then be moved with the same sort of efficiency that crypto has. And that will be I think that's the big moment, the transformative moment, so that it's not just crypto on the blockchain, but all financial services on the blockchain.
Yeah, I mean, look, I think the opaqueness of the existing financial system has, if you go back to 2008 and looked at AIG or Lehman Brothers, 10Q, you just had no idea like what risk they held. Had there been transparency, like maybe we could have averted the financial crisis. As users of DeFi, because we at Parafi, we interact and are traders and liquidity providers and lenders and borrowers using these applications. It's amazing to be able to look at a collateralized lending protocol and see every single borrower and lender, their collateralization ratio, when they borrowed, when they've kind of gotten close to their liquidation covenants. And I think Tushar said it really well earlier, which is, I mean, every financial contract in the analog world can really be boiled down into if-then statements. You know, if this happens, then do that. If the price falls below X threshold, pay party B Y dollars. You know, so every financial kind of instrument, whether it's a structured product or an insurance contract or a credit agreement, can really be boiled down into these if-then statements. And that's really what DeFi has done at its core. And then you have these networks of participants really underpinned by game theory that ensure that and protect the users of these networks. So I think it really comes down to kind of the financial incentives, and they're very powerful.
Awesome. Michael and Tushar, I actually want to make sure we've got enough time to talk about like forward-looking stuff. And Tushar, I've got a question to kind of start things off with you, actually, if you don't mind. I'm not sure, maybe show of hands, did people listen to John Woo talk yesterday? Okay, cool. So not treading any familiar ground, but I'm going to ask you the same question that I actually asked him. I want to move in and ask some specific questions about narratives that are going on in DeFi today. So when you kind of look at this idea of alternative layer ones versus scaling solutions like L2s on Ethereum, it seems like there are kind of two different narratives that are evolving right now, which is that one, the vast majority of value is going to be built in DeFi on Ethereum, and we're going to scale transactions through layer 2 kind of scalability solutions. And then there's another narrative that says, well, actually, Ethereum is kind of optimized for certain things, and really what they're going to be are competing layer ones, and maybe some layer ones are optimized for DeFi, and some are optimized for NFTs, and some are optimized for even different use cases that might not even exist or demand transaction throughput today. What are your thoughts on that whole sort of narrative?
So one thing I can say with very high conviction is that we are going to see the blockchain ecosystem become more diverse over the next few years. We're seeing a lot of different layer 1 chains out there, and they're all choosing different trade-offs. These things aren't just like better than the other, right? It's not just a Pareto improvement in every single dimension. In order to have a Pareto improvement, you probably need a fundamental computer science breakthrough, and that's not what we have. What we are seeing are different trade-offs being chosen that enable different things. When I look at what's happening on Ethereum and some of the promises for layer 2, they are very interesting, but they come with trade-offs. The biggest trade-off of the approach that Ethereum is taking is that it breaks composability. You break composability when you go to different shards or if you go to different rollups. It means that in times of high market volatility, which is relevant for DeFi when there's a lot of action happening, well, if my loan from Aave is on that shard over there, but then I have other assets on this rollup on this shard over here, and I need to get the assets from there over here in order to not get liquidated, well, then I am limited by the throughput of the connection between these. So the throughput of the entire sharded system or the entire layer 2 ecosystem gets bottlenecked down to the throughput of that base layer that is actually communicating everything. You can have some ideas of like cross-chain, like layer 2 to layer 2 bridges, but those are not great. They have a lot of assumptions that like entirely break down during periods of high volatility when liquidity providers are likely to pull all of that liquidity.
Or during hacks.
Say again?
Or during hacks, like what?
Yeah, or during hacks, right? Like those types of bridges are not reliable when you need them the most. So really what we're very interested in is exploring different parts of these trade-offs. One of our big bets in this space is in an alternative layer 1 called Solana, which we really like, particularly because it maintains composability throughout the entire system. Now, this comes with trade-offs. It is not trade-off free, but we believe that maintaining composability, even during periods of high stress, is really, really critical for a successful DeFi ecosystem.
Let me ask you guys then, I'm assuming that you guys probably agree that most, like DeFi is gonna be built on some layer 1 or maybe there'll be a layer 2 like in there, but what are the trade-offs, right? Because there is no Shangri-La. When you're making a system, you need to make trade-offs. Usually it's between something like security and decentralization versus speed and efficiency. So let's say we wanted to make the ultimate layer 1 for, or maybe it's ETH layer 2 for DeFi. What are the trade-offs that you would be thinking about? How would you think about optimizing or designing a really efficient ecosystem to build the financial system of the future on top of?
Who's going first?
Complicated question, yeah.
I mean, that's a really tough question, and that hasn't been solved. But if you could just wave a magic wand, right? Like, I would want to make Nakamoto consensus like way faster, right? The problem is 10-minute block times, or in Ethereum, like 15-second block times is just not good enough. So if we could get leaderless Nakamoto consensus at like 400 milliseconds, like that would be pretty phenomenal. But it's just not technologically possible, given what we understand about computers today.
Yeah, like I would just add, I think certain financial applications require more scalability, maybe less trust. Others require a whole heck of a lot of trust. Like the narrative around Ethereum right now is that it's kind of the settlement layer, and you're probably more comfortable holding significant amounts of value, so hundreds of millions, billions secured by the very decentralized and security of the Ethereum L1 versus having it in an L2 environment. Then there are applications like lending and borrowing that may not require as many transactions per second versus trading, which likely do. So it just depends on which type of DeFi application you're looking at. And certainly like what we're seeing is DeFi applications are moving across multiple chains. Many teams are building across L2 environments, different L1 environments. And so we're kind of, it's not, you don't just have to pick one place to launch.
I mean, I think that at the end of the day, it's like there is this triage of the composability of it, the speed, right, and the trust. And so far we're seeing, that people give up on, one or two of those to achieve the third, or at least two out of three. But in some ways, for this to function in the way that we described earlier, right, that there will be, real leverage from potentially like, trading to, lending and borrowing, right? Eventually, we somehow need to find a solution that sort of satisfies all the three, right? Because one of the issues that do exist, when you're basically using two different chains for two different applications, right, is that it's very difficult to basically move the assets. And I think that the practicality of those bridges today is, still out, right? I mean, I'm not sure that we've really figured it out to the extent that needed for this to work at scale. And by the way, it's also right now requires a lot of technical skills, right? It's very complicated to use this infrastructure, and a lot of abstraction is actually needed over there to really bring, I would say, the mass, I don't know if like the mass market, but basically like the common users.
I was just going to say, you know, we're approaching it slightly differently from historical exposures. So we have in front of the SEC now a Treasury filing that introduces to the SEC interoperability, so that we're agnostic. We're not trying to figure out which chain is going to be the winner. The communities will, but we want the exposure to be able to travel to the different, blockchains if they're compliant and at the will of the people. So I think there are lots of different innovations that will take place, and it's hard to know exactly which will be the killer application that will it be this unbelievably flexible blockchain, or will it be a more flexible security that wins the day? I mean, it's hard to really know at the end of the day, and I think really the unknown is where will the regulators insert themselves to force what we do? And I don't have the answer. I mean, you just have to work them.
Yeah. So from approaching this from maybe an investor's perspective here, let's say I'm an investor and I want to get exposure to DeFi as a sector, right? There are a lot of different ways to slice that. Like how many folks in the audience, if I said Uniswap, how many are familiar with that? Something like Compound? Okay, cool. So there are different applications, right? There are borrow and lend protocols, there are decentralized exchanges. There are also different layers, which is what we were talking about, layer 1s versus layer 2s and things like that. If you guys were just constructing a portfolio of DeFi exposure, what are the different categories? How would you approach structuring something like that?
Yeah, I can take a crack at that. So I think the layer 1s that we've been talking about, Ethereum, Solana, the L2s, those are not really DeFi applications. They're generalized smart contract platforms. You can run gaming applications. You can run DAOs that perform all sorts of, that trade NFTs. So those layer 1s are kind of a different bet in a way. The application layer for DeFi really spans across like several different categories. So there's fixed income infrastructure, which is lending and borrowing protocols, zero coupon bond, and decentralized interest rate swaps. Basically everything you see in traditional fixed income markets. There are asset management products. So think about these as kind of yield optimizers or robo-advisors on the blockchain. There are decentralized exchanges. So that can be everything from like a spot AMM like Uniswap to decentralized derivatives or perpetual swaps. And then, I would say the fourth category is probably insurance. So there are different DAOs where you can buy insurance or take the other side of the insurance and effectively underwrite the risk. And then so effectively everything in traditional finance is kind of getting built in DeFi to some extent. Some categories have more product market fit than others. I think like the application layer is particularly interesting because you can underwrite these applications as if they were fintech companies. They're just not C Corps, they're DAOs, and just because they're DAOs doesn't mean they don't earn money. They do. You can look on chain and see the fees they generate and run a discounted cash flow analysis or look at price to earnings multiples. And so I think the investment case for this DeFi application layer is very much, you can apply traditional underwriting approaches to looking at these networks.
Yeah, I would agree with that, though. I would say sometimes like looking at the cash flows of that protocol can be a backwards-looking way to look at it, right? Like, or looking at like total value locked can be backwards looking because we're still just so early in this industry that we don't necessarily value everything off of those cash flows. Like that's not necessarily what we're looking at because we're expecting this stuff to grow by like 100x or 1,000x in demand over the next few years. And so when you're expecting that type of growth, the multiples you're willing to pay can be incredible. And some of these protocols don't have monetization turned on yet, right? Like we talked about Uniswap several times. Like Uniswap does not have monetization turned on. If you own Uni tokens, like you do not have any claim to any cash flows whatsoever, like nothing, right? All of those cash flows go to the liquidity providers in the Uniswap protocol. You don't get anything yet. So what is the actual multiple? Is it intellectually honest to look at the cash flows going through the system and apply a multiple? Like, maybe? Like, because like theoretically you could get some of it, but like maybe not. So really, like the way that I look at it is, first thing I look at is like, what is the market size? Like how big could this market be? I think one of the biggest markets is probably synthetic derivatives on any asset. I think one big vision of crypto is one big vision of DeFi specifically is anyone in the world can get exposure to any asset without permission, right? Like if you live in some developing nation, you don't have enough money to get a foreign brokerage account, like you should be able to get access to a synthetic Google share. I think people should be able to participate in that wealth creation, even if they're not Americans. I think that that's really valuable. So I look at that market size as being really important. I look at the regulatory risk as well. I think that's really an important thing to look at, just because, I mean, the US regulators have not given us enough clarity yet. Hopefully they will soon. But whenever I see a foreign DeFi team, they automatically get a plus point in my underwriting criteria, just because I think they're less at risk than a US-based DeFi team. That doesn't mean we won't invest in US-based teams. We love US-based teams. But it's just a plus point because they live in a more clear regulatory environment. We also obviously look at what platforms are they building on and what is their go-to market strategy. Something that I think people coming from traditional finance don't necessarily understand, like intuitively about DeFi or the crypto world, is that it's all open source. And that changes your competitive dynamics like dramatically, right? I have a thesis that these DeFi protocols cannot just capture fees. You cannot just charge a fee for what you're doing. I think you actually have to manage some risk in that protocol. Because if you're just taking a fee, like a rent extractor right off the top, then what happens is you just get forked. Someone's going to take your code, they're going to fork it, they're going to say, I offer the same exact thing as them, but cheaper. And they can do that without doing any of the R&D work or any of the spend that you did. So they can commit to doing it cheaper. And so I think that you have to be very deliberate about how you think about the design of these tokens and not just try to be a rent extractor on top.
So I've got a question for you guys. There's a VC in our space called Vichel Garg. He works at a fund called Electric Capital. I owe him royalties because of the amount of times I've borrowed this analogy that he used. But basically, he takes it back to the iPhone and says when the iPhone was coming out, everyone thought that Maps was going to be the big function because it helps you navigate your world so much better. But actually, it ended up being the opposite of that, and the iPhone was the tool that allowed you to bring the world to you, so you actually didn't need to move, right? The idea being when there are these inflection points in these technologies and you have paradigm shifts that cause emergent behaviors, really, really difficult to predict behaviors and stuff that's going to happen. A lot of what's going on in DeFi right now, we're replicating things from traditional finance, albeit in better, more efficient ways. Looking out 12, 24 months, maybe even 5 years, what are some examples of things that you guys are excited about because they're not possible in traditional finance today? Totally new areas of things. And again, this is emergent, it's very difficult to predict this, but like more forward-looking, what are you excited about that this space makes possible?
So in financial services, there are very few exposures that are global, but Bitcoin is global, making historical exposures global, I think is extraordinarily exciting. That will be talking about the developing world, Then the question will be, would you rather have physically owned US securities if you're in Ghana, or would you like synthetic? And people are going to make choices, but basically we're talking financial services. We all want the same thing, better returns with less risk, right? And that doesn't change. This is not Vogue magazine, and wow, he is the best blue jacket. That's just opinion. You want your money to be there when you want your money to be there. And so it's really, we are not going to be leaving the foundational principles, in my opinion, of financial services. We're going to have to evolve the innovations of blockchain, but they're going to have to still be within the foundational regulatory principles that we all face in traditional financial services. And I'm not quite sure, but I think like peer-to-peer, Well, that is an exciting, obvious change of business model that will transform. Will you need an exchange in the future? Does exchanges survive? I don't know. I don't think so.
I'd like it on record that it's a fact that that blue jacket is great, but continue.
It's beautiful.
Thank you. Thank you guys so much. Yeah, I mean, you know, in some ways, like, we're in an interesting, like, kind of like place within the evolution of DeFi where there really hasn't been that much that's been built that has product market fit. There are a few examples, like, okay, Uniswap is like kind of getting to Coinbase's scale in terms of trading volumes. You know, things like Aave and Compound have, you know, collectively maybe 30, 40 billion of capital, like, that's getting lent and borrowed. But there really hasn't been, there's been so little that's been built. We know it's possible because there's kind of very clear proof of concept. So I'm personally just excited for the next 12, 24, 36 months to really see just like, you know, see everything kind of start to come together. There are, you know, the idea of like an NFT is something that really doesn't, you know, NFTs exist in the real world. This jacket's an NFT, right? It's a unique jacket. Other people own the same one, but this one's slightly different. But you know, for physical, real-world items, you can't financialize them. So, but if you have a non-fungible token, you can lend it, you can rent it out, you can borrow against it, you can auction it off. So, like, the idea of an NFT just unlocks all sorts of different new financial use cases, which are really exciting. The other thing that doesn't exist in DeFi today that I think is a huge market is just this idea of capital structure. So you know, there's more debt that exists in the world than equity, but there is no concept of DAO level or protocol level debt in DeFi today. Everyone has an all equity capital structure. So just the amount of different tooling and infrastructure that can just be built around that is, we've like barely kind of scraped the surface on that. So those are some of the areas that I get excited about.
Yeah, I totally agree with all that. This stuff is going to be hard to predict. I mean, like, I remember when I was a kid growing up in New York in the 90s, like, we had two rules that, like, the schools and, like, my parents all taught us was, like, don't meet strangers from the internet and, like, don't get into strangers' cars. But when I leave here today, I'm going to summon a stranger from the internet and get into their car, right? So, like, we just don't know, like, how that's going to evolve. But I do think that one thing that is exciting to me that like, seems like kind of clear about the future that DeFi and crypto is going to do differently than what traditional finance has been able to do is enable products that are path dependent. So by that, what I mean is, oh, you can prove that you have never been liquidated in your 10-year trading history on chain. Well, maybe I unlock higher leverage for you on my decentralized exchange. Or you can prove that, you know, you are using my ticketing platform and then you've been to 10 of my talks. Or if I'm a musician, you've been to 10 of my shows. Well, maybe I'll unlock an early access to concert tickets for you. Or I will enable you to get access to, like, some exclusive merchandise or NFTs or something. And I think a lot of that kind of composability of these different pieces and the transparency of knowing your history and knowing that you could not have faked it, right? I can print out fake, like, concert tickets today and try and claim something, but then if those are on chain, like, that's impossible to do. And so I think that's one element that could be really, really powerful. But once again, like, we have no idea how this is going to evolve. It's going to be so unpredictable. Looking back at this, you know, 10 years from now, we're going to laugh.
Yeah, well, I think that I agree that it's very difficult to predict. I think that probably the area that will be very exciting in the next 12 months is hopefully that this technology will start to be used in the more outside of, I would say, like the VC, hedge fund, prop trading, market making space, right? For real use cases that eventually go to people that have no idea what crypto is, they have no idea what DeFi is, and you know, this is sort of being abstracted in the way that I described earlier, either like, you know, for payments or for higher interest rates or whatever, higher yield. The other thing is really, I think that this NFT and the the concept of NFT with DeFi is what we're going to see there in terms of the ability for creators to really both like, especially digital creators, right? Which is most of what is being created today, I guess, in general, maybe like in the internet, and especially post-COVID, right? That a lot of it is basically going virtual. I think that we will see really interesting stuff over there that those creators can actually monetize, right? Their creation. You can just like sort of imagine how anyone that uploads a TikTok, movie, he gets an NFT. They can put it into Compound, right? They can basically and leverage that to borrow against what they just recorded, right? So I think we will start to see those things, and I think that both the fintechs and clearly primarily the big consumer tech companies that sit in the heart of this media creation, right? They will be able to leverage DeFi and and NFTs and stablecoins and basically the entire ecosystem and create things that, I'm not sure exactly that we know exactly how it's going to unfold, but it's going to be really interesting and powerful.
Awesome. All right, guys. Unfortunately, that is all the time we have. Thank you so much for a wonderful conversation. Everyone give them a big round of applause.